Welcome to the online news desk of the Insurance Times. The Insurance Times is the first monthly journal of insurance in India, being published regularly since 1981. We are celebrating 43 years of publications in the year 2023. Here are some highlights of some important news.
IRDAI asks insurers to design covers for mental illness, HIV. The IRDAI has made it mandatory for non-life companies to introduce health covers that cater to persons with disabilities or mental illnesses or HIV-positive persons. The regulator has provided insurance companies with a model policy setting out the minimum scope and parameters for product design. While insurers can widen the scope of this product, they cannot narrow down the benefits. Legislation had been introduced to ensure that these people are not discriminated against, but many insurers have not introduced products that comply. While some have not explicitly excluded these segments, general exclusions regarding pre-existing conditions make it difficult for people to get coverage. Every general and standalone health insurer who has been issued a certificate of registration to transact general or health insurance business shall mandatorily launch and offer the respective product immediately, IRDAI said. India's general insurers eye bigger marine pool for Russian oil fertilizer shipments. India's general insurers are looking to set up a larger marine insurance pool to cover the risks of transporting crude, edible oil, project machinery and fertilizer from war-torn Russia-Ukraine region. This is expected to facilitate trade as the West ratchets up sanctions on Russia. A senior official said that both the government and the IRDAI are keen to develop more indigenous capacity for maritime insurance risk. Last year, general insurance companies led by state-run reinsurer GIC Re had set up a cargo pool for fertilizer imports with a net capacity of over 500 crore rupees. The pool did not generate any losses, which has encouraged insurers to explore more capacity and better rates. While the cargo pool has performed well, the ongoing war has exposed other shipments to vulnerability as foreign insurers are unwilling to take the risk because of the sanctions imposed. "60% private insurers see rapid rise in fraud. About 60% of Indian private insurers believe that there has been a significant rise in insurance-related frauds, and as risks lurk, there is an immediate need to consider a proactive fraud risk management framework, a Deloitte survey said. Insurance companies in India have experienced a rise in fraud instances in life and health insurance, and increased digitization, remote working post-pandemic, and weakened controls are key factors contributing to frauds. About 60% of survey respondents believe that there has been a significant rise, while further 10% experienced a marginal increase. The survey conducted was based on interviews with the key C-suite stakeholders, senior management responsible for compliance across leading private insurers in India. Non-life insurance industry clocks 19% growth in January 2023. Non-life insurance industry has grown by over 19% in January 2023, and PSU New India Assurance, the market leader among general insurers, saw its January premium grow by 41% year-on-year. The massive premium growth of New India Assurance can be attributed to its winning the mandate to run Rajasthan government's Chiranjeevi Health Insurance Yojana. On account of this scheme, which will be covered by the insurer for the next 2 years, New India got a premium of 675 crore rupees in January 2023. Every year, New India Assurance is expected to get a premium of 2,700 crore rupees on account of the Rajasthan government's health insurance scheme. There are several other non-life insurers interested in the Rajasthan government's Chiranjeevi Yojana, as this insurance scheme will cover 1.38 crore families.
We shall be back after a short commercial break. Please stay tuned. back after the break.
ChatGPT Web3 public blockchain will drive innovation in Indian insurance sector. The country's IRDAI confirmed it would explore using blockchain and Web3 technologies to improve its insurance sector. IRDAI Chairman Debashish Panda disclosed that the sector will be keen on tapping into the global wave of digitization. ChatGPT, which is one of the classic disruptions, the popular AI chatbot amassed over 100 million users and it's already changing the way the world functions. For insurance, times are changing. We will be venturing into the world of continuous underwriting and seamless insurance. Using distributed ledgers, Panda stated that drivers would see the fluctuations in insurance costs based on the road state and routes in real time. The use of smart contracts will allow users to receive payouts automatically without the typical bureaucratic processes plaguing the sectors. Panda noted that the sweeping changes are coming on the heels of heightened interest from global venture capital firms. Bogus GST invoices row. Prosecution starts against e-insurance intermediary. GST authorities have initiated prosecution against a leading online insurance intermediary for allegedly generating bogus invoices of around 100 crore rupees in the name of marketing and sales service. The intermediary, based in Bengaluru, got prosecution notice in January from the Directorate General of GST Intelligence. The intermediary has been asked to provide proof or evidence of the service against which invoices were raised. In the absence of proof, the owners could face rigorous punishment, a source in the DCGI said. According to Section 122 of the Central GST Act, issuing an invoice without supply attracts a penalty and imprisonment of up to 5 years if the involved amount is 5 crore rupees or above. The offence is not bailable. Tax on high premium policies won't impact insurance penetration, says Finance Minister Sitharaman. The budget proposal to scrap tax benefits for income from high-value insurance policies will not impact deepening of insurance penetration because it will plug tax avoidance that was coming in from the garb of insurance. Finance Minister Nirmala Sitharaman said. The budget presented proposed that annual income from insurance policies beyond the aggregate premium of 5 lakh rupees a year will be taxed from the upcoming fiscal year. The new rule does not include returns from ULIPs and the amount received on the death of a person insured via term plans. Annual premiums over a certain threshold only are being taxed if you are able to pay that kind of premium. What will be your salary? It is not going to go against deepening of insurance, Sitharaman said. Life insurance companies are likely to approach the centre seeking some tweaks to the budget announcement that scrap tax benefits for large-ticket traditional plans while making rebate-linked savings unattractive for the average taxpayer.
This was all from the Online Insurance Times news desk. We will be back with latest news in insurance industry in our next edition. Please click on the subscribe button and press the bell icon to get notifications for the next video. Stay connected.